What's up, guys? Welcome to the first edition of the Internet Capital weekly video and audio newsletter. I decided to start doing this because I often get questions about my views on the markets, on trends, on tech, and I find it easier to express my views in full in this format. And also, it just makes it more accessible to you guys. So you can listen to this or watch it during lunch, while you're taking a walk, while you're commuting, etc. So I hope you like it, and let me know if you have any suggestions about what you'd like to see, and I can try to incorporate those moving forward. But to kick off the newsletter, let's just start with the first topic, and that would be Bitcoin price and market activity. So Bitcoin is currently sitting at about 104,600 US dollars, and that's up about 2% on the week, which is pretty good considering how we started. And the way we started was with a 6% sell-off, which fell in line with a broader US equity market sell-off. And the reason the equity market sold off is because of a Chinese AI company, interestingly. So a company called Deepseek released a super low-cost open source LLM model. And the reason this was very bad for US equities, supposedly, is because they were able to train a highly effective model as good as OpenAI's or Meta's, et cetera, with much less funding and much less computational resources. So they needed way less chips, which is what NVIDIA sells, to be able to produce this thing. So people aren't thinking that NVIDIA is going to be able to sustain its current profits. And because it makes up such a large percentage of the equity indexes, such as the S&P 500, that's bad. And NVIDIA sold off 17%, dragging the rest of the market down with it, and crypto followed. And crypto is still highly correlated to US equities markets, whether you like it or not. And it's funny because this news actually isn't bad for crypto. It might even be good for crypto because there's cheaper, better AI models, and there are a lot of crypto products that can and will benefit from AI. So that's what happened. I think that this is overall good for markets and productivity in general, but the market had a bad reaction on Monday, and Bitcoin traded down to 98,000. And whenever Bitcoin traded down to 98,000, altcoins and the rest of the market nuked. Meme coins are down super bad. They went down 40, 50, 60% plus. Fartcoin went from a $4 billion fully diluted valuation down to about $1 billion. It's up a bit more now, but it was very rough. And people were calling for $80,000, $70,000 Bitcoin. And these fears have actually dissipated at this point in the week, and today's Thursday. And this is because on Wednesday, there was a Federal Reserve meeting. And what happened in that meeting was that the Federal Reserve decided to keep interest rates steady at about 4.25 to 5%, which aligned with market expectations, which was good. They basically are opting for a wait and see approach to see how inflation and growth pans out over the coming months, but they think they're on track to fulfill their dual mandate of reaching 2% inflation and maximum employment. They see no reason for changing their current plan. So that was good. But the really good thing was that Chair Powell actually got a question specifically about crypto during the press conference. And he was asked by a reporter about the potential risks of banks holding crypto assets. And the reporter sounded skeptical about it. He seemed probably anti-crypto. And Powell actually seemed dovish. He seemed optimistic about crypto. He said that they've been working with Congress for a while to establish good regulatory frameworks that also promote innovation. And he thinks that innovation is super important for the financial system. So it seems that Powell is actually pretty positive on crypto, and that was good for markets. And after those worries about a more hawkish Fed were gone, the markets kind of recovered, and Bitcoin traded back up over 100,000, and now we're sitting here at about 104,000 at the top of this range that we've been in for a few weeks now. And overall, the markets are looking pretty good, in my opinion. And I think the bears who were saying we would trade down to 70,000 are probably wrong for now. Who knows? Anything could happen, but that is the news there. So let's move into our first non-market story. So we're going to go to NFTs, actually, interestingly, and we're going to look at Pudgy Penguins, because Pudgy Penguins NFTs have dropped by 25% in the last couple days, and they're down 50% over about a couple months. And the recent sell-off was triggered by a couple things. So there was the launch of the Abstract L2. So it's an Ethereum L2 built by the creators of Pudgy Penguins, which they're called Igloo Inc. And recently, Igloo Inc. has released a token called Pengu. It was on Solana. I believe it will be available on the Abstract L2. And then they just released the Abstract Ethereum Layer 2 this week. And the vision for Abstract L2 is to be a creator focused ecosystem. So they're going to have a lot of social apps and they have a lot of initiatives going on that are going to incorporate NFTs and other things. And this was just launched. And the reason that it didn't go so well is a couple things. So one is that Pudgy Penguins holders and community members thought that Pudgy Penguins would get a large airdrop allocation, perhaps of the Pengu token, for holding the NFT because they're launching this new network. They have this token. They're probably going to give them a bunch. And instead, what they got was a points style program where Abstract users can earn points probably for future tokens for conducting certain activities on the network. And the Pudgy Penguins holders simply get a points multiplier. And the market was not happy with that. So that prompted a sell off. And then I also read that people who were leveraging their Pudgy Penguins. So basically what they would do is they would deposit their Pudgy Penguins into a protocol, and that allows them to borrow dollars against it, borrow stable coins. And what was happening is that as people were selling off Pudgy Penguins, their loans were at risk of going bad because they borrowed too much for the value of their deposited Pudgy Penguin. So this resulted in people selling off their Pudgy Penguins quickly, and then it was just a self-reinforcing cycle, a classic deleveraging event. And this has led to a nearly 50% decrease for Pudgies over the last few months. Overall, I think the Abstract team is super good, and this was just an unfortunate overall situation. I think there's some things they could have executed better on the Abstract side, and it's yet to be seen if they will get real adoption, especially after this kind of tough debut. And we'll take a look at the Pengu token as well. But overall, I have faith in them. I think Luca Netz, who's the founder, is a super good founder, and he's going to steer it in a good direction. But Pudgy Penguins token, which was launched a couple months ago, has been kind of in down-only mode as well. So rough week for Pudgy Penguins, but I think they'll be back on their feet. So let's go with something different here now. We're going to pivot back to crypto times AI. So this was a super hot narrative with the launch of AI 16Z on Solana with virtuals on Base, where basically anyone could create an AI agent who would have a Twitter account, a crypto wallet, and they would just have all these kind of interactions. So this was a huge meta just a couple months ago, and it kind of faded. But it seems that we're getting a second wave of AI enhanced projects. So this seems to be mostly DeFi projects enhanced with AI. And the one that we're going to talk about is a project on Coinbase's Base L2. So this project is called Venice, and it is a privacy-focused AI platform launched by Eric Voorhees, who's a pretty high-profile crypto investor and founder. And what Venice supposedly offers is a private, decentralized AI LLM platform. So just like your ChatGPTs, et cetera, you can use this thing and not give your data up to someone else. And this is kind of the whole vision for it. And with the platform, there was this token. So it's called the VVV token. And what it does is users can stake it to get access to the APIs for this, to be able to use the protocol programmatically, if you're familiar with APIs. But that's its utility, and people were super bullish on it at the start. So it quickly mooned to about a $1 billion fully diluted valuation, which is pretty large, making it top 50-ish crypto asset. Here around $18. It's currently sitting at $6. And the main reason for the sell-off was that, one, the initial hype wore off. I think people were simply less bullish on the product after really learning what it is. I don't really have a comment there yet. But two is that there were insider trading concerns. So some folks at Aerodrome Finance, which Aerodrome Finance is a decentralized exchange on Base and across Ethereum L2s and the Ethereum ecosystem, they had relations to the project supposedly, or insider information, and bought $50,000 worth of tokens before the announcement of its launch went live. And they turned that $50,000 into $1 million in about 1 hour. So there was huge backlash after this was discovered, and then Aerodrome suspended those two contributors, and that's kind of how it resolved. But not a good look. This is kind of a continuation of the crime cycle, as people are calling it, just a lot of shady activity. And this was how the VVV launch went. So we'll see if it recovers. Perhaps an interesting product. Eric Voorhees is a very skilled entrepreneur, so we'll see what he can make out of it, but not the best start there either. And on the topic of insider trading, lots of insider trading this week. There was more of it. So Trump's crypto project, which is called World Liberty Finance, bought Move tokens, MOVE, just before news about this Move project potentially working with the Department of Government Efficiency. So essentially what happened is Elon expressed his interest in integrating blockchains into Doge and into the federal government to streamline processes, make it more efficient, et cetera. And the question is, what blockchain will they use? And they didn't know. So there was news that potentially they would be working with Movement, who has the Move token. And World Liberty Finance purchased about $2 million in this Move token just prior to the announcement that Doge might be working with Movement. And this pretty obviously smells like insider trading, just because World Liberty Finance, Trump's project, is super involved in politics, obviously, and they have a lot of insider info. So it's not a good look, and people were speculating on more insider trading. And this is really just emblematic of the crime cycle theme. So it's not a good look, and people were pretty upset about this for a while. But to be fair, the World Liberty Finance project does own mostly other tokens like ETH, like DeFi tokens and stablecoins, and they're not just out here making egregiously criminal moves, but this was a little bit shady, and there's your continuation of crime for the week. So to get maybe back on a bit of a more legal note here, we'll talk about some ETF filings. So we got some ETF filings this week, including Dogecoin, so you can potentially soon hold Doge in your 401k and your retirement accounts, which is super funny. I'll probably do that. Solana and a few others, but also just tonight, I'm recording on Thursday, the SEC approved a spot Bitcoin and Ethereum ETF. So it would hold both Bitcoin and ETH weighted by their market capitalization. And I believe that would make it about a quarter ETH and 3/4 Bitcoin. And that's super cool, being able to hold both of them at the same time, because in traditional markets, diversification is a super big deal. And I think that being able to hold them both in one product just makes that process a lot easier for people. And something like this will be in demand. I think that we'll see more ETFs that index entire sectors, like the DeFi sector, like the AI sector, et cetera, the large caps, be offered over the coming months and years. So super cool about that. So I'll leave the last one. The last one is that the recently pardoned Ross Ulbricht, who he ran the Silk Road Exchange, which was basically a Bitcoin exchange back in the day, which drugs were sold on that market. He operated it, even though he didn't directly know all the transactions, whatever. But Trump pardoned this guy, and he's back. So he owns some crypto, and people raised. They created a meme coin for him to help him with his legal battles and sent him some of the supply. So he gets out. This meme coin's worth about $12 million, and he's going to sell it. He's going to provide liquidity with it to earn fees on it. And he makes a mistake, apparently, and loses $12 million from doing this just the other day. So Ross is out of prison, but he had a bad start accessing his funds. So it is what it is. You give and you take. Being out of jail is probably pretty good overall. So that happened. Okay, next section. So here we're going to move into the crypto Twitter X rundown, which basically I'm going to give the top 3 or 4 tweets or threads from crypto Twitter about the current state of crypto. And this is super useful because what you see in mainstream news outlets and even crypto native news outlets is typically a little bit behind. Most of the alpha in terms of understanding the space, in terms of understanding the tech, is actually on Twitter. So I'm going to give a rundown there, and I think this will actually be super useful. So the first tweet that I'm going to do here, and I will just read this to you guys. It is a bit long, but I think it's super interesting thesis. So I'm going to read this, and then I'll give a few thoughts. So It's from Ryan Watkins, who's a pretty notable fund manager in the space. So he says, this is the title: Solana, Meme Coins, and the Wild West of Financial Experimentation. So 2 weeks ago, the president of the United States launched a meme coin on Solana. It hit 70 billion in 2 days. Yet today, I still don't think the market has fully processed the second and third order effects. So here's my best attempt to make sense of it all. The Overton window just flew open. If the president can launch a meme coin, why can't every politician, every celebrity, every community, why can't you? Trump's new crypto czar, David Sachs, recently called meme coins collectibles akin to NFTs. It's not an official designation, but it signals something bigger. Regulatory clarity is coming, and with it, the floodgates will open. In fact, this isn't just a meme coin boom, it's an explosion of assets, bigger than anything we saw in 2024. And to understand why, you have to see meme coins for what they really are: a Trojan horse for internet capital markets. And this internet capital markets idea, this phrase, has been really popularized on crypto Twitter, and it's starting to gain some traction. So we'll see. But meme coins in the future of SocialFi. Trump's meme coin isn't just a collectible, it's an experiment in SocialFi. The first signs of this can already be observed in a handful of licensed Trump product websites, including Get Trump Watches, Get Trump Fragrances, Get Trump Sneakers, now accepting Trump for payments. So what he's doing is bootstrapping utility for it as a type of social currency. And it shouldn't be surprising either, because of the plenty of world leaders in history have attempted to do so, to create their own money. I'd even go as far to say that the most meme coins are already prototypes for social currencies: crude, speculative, and mostly worthless, but they are evolving. Over time, they may become assets tied to real economic value produced by a person, community, or network. This is already happening in the AI agent sector, where teams are backfilling utility after launch. So 2024 was a pump fake, 2025 is the real deal. There's a strong chance that 2024 was SocialFi's false start, while 2025 will be its breakout year. Abstract, Tribe, CloutMe, Kaido, and others are laying the groundwork for a level of social virality crypto's never seen before. Streaming, social trading, paid groups, attention markets. It's not all dissimilar from meme coins, capturing and monetizing attention. And it won't stop there. The next wave: startups join the party. If individuals can launch meme coins, why can't businesses? This isn't just a US phenomenon, it's global. Vine and Jelly Jelly if Vine and Jelly Jelly are an indication, we're on the verge of an explosion of new startup assets on blockchains, especially Solana. Quick intervention. So Vine and Jelly Jelly are two recent meme coins which were launched by the previous co-founder of Vine and a co-founder of Venmo on Solana. And they're basically saying that they launched these meme coins to help fund new products. And that's pretty interesting, and there's some merit, and this could definitely be a brand new trend, maybe a new version of initial coin offerings, which we saw back in 2017. But nonetheless, I'll continue. I just want to give some context there. So he says that some of these coins will be outright scams, as expected, but the handful may create lasting societal value. So internet capital markets, as they say at the Solana Foundation, this is what's being created: one global unified substrate for finance open to everyone. The dot-com boom may look small in comparison, and maybe in hindsight, we'll call what's coming the dot-fun boom, the era of unconstrained, rapid financial experimentation on blockchains. Of course, this is all speculation. Directionally, I may be right, but by magnitude, I could easily be wrong. Figured I'd share my unfiltered thoughts anyways. So I thought this was super interesting personally, and I think there is some potential merit to it. And I do have some thoughts about it, but before I give my thoughts, I will read a related tweet from Vance Spencer. So I'll bring these up back to back and then give my thoughts in summary at the end. And this is wrong tweet, sorry about that. But this is similar but adjacent. And I think his response here is correct and warranted. And there's a lot of directions that we could go with the thesis laid out previously. So Vance says that Vine/Jelly were the first of many startup tokens. Startups are essentially a euphemism for utility tokens versus memes. Problem initially is selection bias of low quality startup tokens, mostly founders that want liquidity. These tokens mostly go to zero. But the market is now thinking about what utility means, which is a world beyond memes. People then ask which on-chain startups generate fees, have buybacks, have large total addressable markets. growth that is sticky into the future. The market realizes that it doesn't want the coins who are selling it. It wants the ones that are being bought back. Sometimes the meta writes itself. And I think this is super good. I think that the market is essentially getting exhausted from the meme coin meta. We had the meme coin super cycle, as everyone called it. We saw Pepe pop off to start the whole thing. We saw Whiff. Well, I guess Whiff and Pepe started the whole thing. Then we had this flurry of meme coins. Chill Guy. We had Hawk Tua coin, which ended up poorly, but you get the idea. There were thousands of meme coins, but the market is essentially tired of it, and we're moving into an era where utility is actually valued for once. And it's actually going to be important because of the regulatory framework that we're getting in the United States. Now that token projects don't have to worry about being sued or kicked out of the country, they can actually create interesting financial models where their products generate fees, and the fees can be distributed to token holders or used to buy back the tokens, as Vance says, to increase the token price and make it a valuable asset over time. And he's saying that basically this whole phrase that all the Solana people are saying about internet capital markets is just a euphemism for that idea that utility and things that actually have value are back. And this is a sleight of hand pivot perhaps for Solana people, because they have flat out dominated meme coins, and they won that by a lot. But they're realizing that this is changing and they really need to pivot into something durable over time, and this is their attempt to do so. So that is my thought there. I think Vance absolutely killed it, and he was completely right about that. But that's kind of the current vibe of crypto Twitter and what's going on there. So keep your eye on that one. Keep your eye on the markets, and keep your eye out for our new video. We're still going to continue to do the podcast with me and the Grand Tonto. That will be out. But let me know if you liked this. I think this perhaps could be an better way for you to get this information, and I hoped you liked it. So that's going to be all. I hope everyone has a great weekend. Happy Friday, and we'll see you next time.